You may have noticed a trend with financial gurus. To a person, they tend to hold a deep hatred for permanent life insurance. We're talking whole life, universal life, index universal life, and variable life. Anything other than term insurance is verboten, toxic, radioactive, and should be stricken from your vocabulary. Take Dave Ramsey, for example. He says that if you have permanent life insurance policy, you should surrender it immediately, regardless of how much you would incur in surrender charges. He also says that the only reason anyone ever gets cash value life insurance is because they're dupes, and they just haven't researched it enough. And then the moment they do research it, they'll abandon any plans they ever had to enter into the arrangement. Susie Orman says that if any financial advisor ever talks to you about cash value life insurance, you are to never work with that person again. She further declares that anyone who's trying to sell you life insurance as an investment is not acting in your best interest. Ramsey Sadie of Netflix's How to Get Rich documentary once wrote a book called I Will Make You Rich, in which he dedicated a single dismissive paragraph to cash value life insurance. He did it in the context of discussing how a friend of his got scammed by a quote-unquote financial advisor. He warns the reader that if anyone ever mentions the word whole life insurance, then you instantly know you're being scammed and overcharged for financial planning advice. Now, I much prefer index universal life over whole life, but as evidenced by his posts on Twitter, Sadie holds a similarly dim view of that version of cash value life insurance as well. The question here becomes, if there is uniformity of opinion when it comes to cash value life insurance from a broad range of financial gurus, how can we not conclude that it shouldn't be integrated into a balanced, comprehensive approach to tax-free retirement? Well, as you know, I've been responding to financial gurus like Dave Ramsey and Susie Orman for years, and over that time frame, I've developed a working thesis as to why they uniformly hate permanent life insurance, and it seems to be confirmed by a fair amount of empirical evidence. Financial gurus target massive audiences across the nation who generally are not good at managing their finances. I've often said, for example, that Dave Ramsey's target audience is those Americans who make $50,000 a year and spend $60,000. In fact, his best-selling book, The Total Money Makeover, is designed to take couples who are floundering in debt and make them financially independent. And for people who fit this demographic, I'd agree that cash value life insurance is not their top priority. Not defaulting on their mortgage is a far more pressing issue for these types of folks. Susie Orman's target demographic is not all that dissimilar from Dave Ramsey's. And Ramsey Sadie just did a Netflix series, several episodes of which were dedicated to getting people out of debt. So when you're addressing a huge homogenous audience who is generally drowning in debt, you simply don't have the luxury of nuanced explanations. When it comes to a financial tool for which there are a broad array of applications, you have to package your message in a way that's easily digestible and that can be reduced to a simple mantra like cash value life insurance is bad, or term life insurance is the only life insurance you'll ever need. Financial gurus are forced to take a binary approach when it comes to navigating the permanent life insurance discussion. It's either good or it's bad. It's a black and white issue. If they were to take a nuanced approach, such as it's good in scenario A, B, or C, but not in scenario D, E, or F, that would muddy the waters and foil their one-size-fits-all formula for financial freedom. Furthermore, it would prompt interactions with their listeners in which they would be forced to take a position on which scenario calls for cash value life insurance and which does not. And in the process of navigating these queries, they would reveal their superficial understanding of all things life insurance to the entire world. This, of course, would provide welcome fodder for people like me who love to critique their ill-conceived advice on our YouTube channels. So they're better off avoiding the entire discussion by taking a black and white one-size-fits-all approach. Now, all this said, are there any financial gurus who do consistently affirm the need for cash value life insurance? As I've engaged with financial gurus over the years, one name keeps popping up over and over again, and that's Ed Slott. Ed Slott is a nationally renowned CPA and best-selling author. You may even have seen his financial workshops on PBS in any of 100 metropolitan areas across the country. In fact, the Wall Street Journal called Ed Slott the best source for IRA advice. In fact, in his myriad presentations across the country, he routinely reminds his audiences that he is not a paid financial advisor. He doesn't get compensated for stocks, bonds, mutual funds, annuities, or life insurance. Having said that, here's what he had to say about permanent life insurance. You need to realize that life insurance is an investment, but it's better than your typical investment accounts because it's tax-free. In fact, like me, Ed Slott is a huge fan of combining the benefits of cash value life insurance with Roth IRAs. Slott explains, Roth IRAs and life insurance can single-handedly remove most of the taxes you or your beneficiaries will ever have to pay. He further explains that The tax exemption for life insurance is the single biggest benefit in the tax code. Make it a part of your retirement savings plan. So here we have a nationally renowned CPA who the Wall Street Journal called the best IRA advisor in the nation, who is making the case that cash value life insurance should not only not be avoided, like Ramsey, Orman, and Sadie are saying, but that it should be integrated into your retirement plan. So why does Ed Slott diverge so dramatically from the stated positions of Susie Orman, Dave Ramsey, and Ramit Sethi? Perhaps it's because Ed has 3 decades of experience working with actual clients and has observed the real-life impact that cash value life insurance has on the lives of retirees and their beneficiaries. Simply put, Ed Slott is not a financial guru in the Ramsey, Orman, or Sethi mold. He isn't trying to fashion a one-size-fits-all strategy for the masses. He's an educator who understands the IRS tax code and who clearly knows that tax planning in retirement, particularly if you have substantial assets, does in fact require nuance. It requires an individualized and customized strategy that takes advantage of all the tax-free nooks and crannies in the IRS tax code. In summary, not all financial gurus are created equal. Some financial gurus are forced to package their formulaic approaches to finances such that large swaths of Americans can easily digest it. And while this approach makes it difficult to apply their advice to individual scenarios, it often makes for good entertainment. When it comes to retirement planning, you're much better off getting your advice from financial experts who understand all of the available tax-free benefits within the IRS tax code and who aren't swayed by the popular rhetoric of today's mainstream financial gurus. That's one of the reasons why I asked Ed Slott to write the introduction to my best-selling book, The Power of Zero, and why I continue to join Ed in public events across the nation, where from the very same stage we preach the benefits of cash value life insurance. If you want to learn more about the benefits of cash value life insurance in your retirement plan, be sure to check out my tax-free toolkit. You can download it for free at taxfreetoolkit.com. If you're a financial professional and want to learn how to become a certified Power Zero advisor, head over to powerzero.com and opt into my free 3-part video series. By the way, if you have any comments or questions, feel free to drop them into the comment section below. I respond to every single one of them personally. And don't forget to click like, subscribe, and the bell so you never miss a video. This is David McKnight. I look forward to seeing you on the next video.